Now let's get into today's build. I'm super excited, guys. We're going to be able to build the inverted model today. I put everything in place. I got everything ready. So buckle up and let's get to it. First thing, I built this. It's not a complete prompt, but it has all the pieces that I need. So here's how I'm building the prompt. Now, first off, before we get into the inverted model, we have to finish the real asset market model that we were working on yesterday. Now, the first thing I did was this. I'm going to show you two things that I worked on. First off, I think I put this in Perplexity. Yeah, so here's Perplexity. I'm going to show you two things I'm working on with the real asset model. I told you guys that I would incorporate the index analysis that we have for Dow, NASDAQ, and S&P 500. Let me show you that. Where did I do this? Let me check something else. Where is it at? Where's it at? Where's it at? Is this it? No, that's not it. Give me a second. You know me, I'm all over the place with my AI. Oh, no, no, DeepSeek, DeepSeek. I think it was DeepSeek. Oh, I also want to show you that. Let me show you DeepSeek. So here's what I did in DeepSeek, guys. Pay attention. I asked DeepSeek if they know when they're gonna get their update. I'm like, well, wait, let's just ask DeepSeek, right? Maybe they know. But no, there's nothing. There's nothing. They're saying, March 2nd was the original. That didn't happen, so it's still up in the air. So I
That
want
was
to
a
show
good
you that
idea.
yeah, right. Let's ask DeepSeek if they know when their updates coming. But no, they didn't know. They went out to the internet, nothing. And then here's how they did it. They gave it to me in Chinese words.
Oh
That's how
wow.
I know it was real. And then I asked them to translate it, but they said no, there's nothing. There's nothing that they have yet. But all right, so I'm gonna get to that in a second. So let me go back. It wasn't DeepSeek. Was it Claude? All right, I can show you the output. I can't find the prompting, but here's basically what I came up with. So here's the Dow, here's the Nasdaq, here's the S&P 500. This is the PDF with all three of them inside of it. So I took that PDF, index future analysis models, and then I combined it with the real asset model right here, PDF. I combined these two into a real asset model with index futures. I uploaded this to AI. I can't find it right now, but maybe this is it. You know what? I can do this. Dow. I know how to find it. Nat no Nasdaq Fellowship NI. No, it's here somewhere, guys. Give me a second. Dang it, man. I work with so many of these. All right, D DFNI, SPFNI. Dang it, man. All right, I'll just show you the output, man. I would like to show you the work product. So basically, man, I want to show it to you. All right, so basically, I basically told it, um, go through the real asset model, and I basically said if it's over 75. Let me see if I have this. Dang it, man! I worked on this all last night. What AI were you working with, Aaron? Think. Kimmy, Perplexity. Was it this? No, I pinned it. I pinned it. No. I pinned it. I remember pinning it. Give me a second. I made sure to pin it. So I just got to go back to the AI. All right. Oh no, was it you? I went to you also. Yeah, I think it's you. That's the reason why I can't find it. I went to UAI. Yeah. That was it. Give me a second. UAI. I pinned it. That's why I can't find it. I went to UAI, and I'm going to tell you why I went to UAI. Come on, man. You know what? I'm just going to go to the spreadsheet. Yeah, I built it on UAI. So give me profile. Oh, here it is, fellowship. No, that's not it either. Dang it, man. I'll come back to that. Oh, I'm frustrated. Where did I put it? And I know clearly what I put in. I wanted the grade to be over 75. Let me find 75. Nope, nope. Mm, this is what happens when you work on so many things at the same time. All right, Aaron, think. All right, I'm gonna have to move on, man. Can't find it. Well, for whatever reason, I'll show it. I'll show you tomorrow. I'll try to find it and I'll show you the work product. But basically, I put in if the if the if the index futures score, and we know the three scores, right? The Dow Jones Fellowship, the Nasdaq Fellowship, and the S&P Fellowship. So DNMI I'm sorry, DFNI, NFNI, and SPFNI. Those are the three models. But I can't find where I put it in the prompt. But I specified 75, a score of 75 or higher. And if the probability or the confidence is above the 75, go ahead and execute one of the three models. And I remember running it because the AI even said that if the score is good on multiple, that it'll run multiple. And I just can't find the AI that I ran it on. Man, I can't. Oh, I'm so frustrated. I'll find it, guys, and I'll show it to you tomorrow. All right, but that's the first part of the real asset market analysis, is to be able to dive into the index futures and run those original three models. But here's the second part. You guys are gonna love this. So the second part is I outline the stack. We always want to introduce that, right? I'm building a comprehensive stock market engine. Each one will search, so it gives the stacks. I pull the suggestion mechanisms, which is the low risk. All of this is also in it's in the real asset model that we did yesterday. And then I pulled the decision tree. Remember I said I copied this part out where it gives you a breakdown of the decisions on how they come to the suggestions, safe havens, real assets, equivalents, and inverted. All of this is broken down in these six areas. So here is my prompt. When a primary market becomes inaccessible due to low volatility, high risk, or poor sentiment, traders often turn to alternative markets with lower correlation, high liquidity, or defensive characteristics to seek equivalent returns or to protect capital. I pulled that off of the AI. But here's where we start. A key component of the real asset analysis is the AI providing expert suggestions for equivalent markets that may have a similar reading of safety or bullish. We put that safety in. Take the following primary markets and use it to build a matrix of secondary alternative markets that are equivalent in some way. Define the similarity and the rationale for suggesting it. And let me show you this. I built it, guys. Pay attention. First, we have the primary markets, right? We have the four horsemen: oil, bonds, dollar, commodities, gold, all of that. Pay attention. I built ladders. I built future ladders for everything. So in oil, we have the WTI and Brent. I don't know if your trading platform offers it, and you can make adjustments based on that. All right, but we have the CMI and the ICE. I'm sorry, we have the CME and the ICE based on what you want to trade. But I built that entire ladder of crude oil futures, and that's where crude oil is. The bond markets. You have three types of bonds: U.S. Treasuries, international bonds, and then corporate bonds. So it gives you the three types of bonds with their tickers. Then we get into currencies. I took the basket of US, there's a basket of currencies that's connected to the US dollar. I created a currency future ladder of all those currencies. Everybody see this? I built one for gold.
Wow.
All right, that's a small little contract ladder for gold, micro, E-mini, full. I built one for corporate shares. I just listed it. I'm going to let the AI kind of figure out what to do with it. But that's all of the 10 or 11 of the corporations in the fellowship. Then I went into the index futures, same contract ladder. And then the commodities, I only did the metals. So you have gold, palladium, platinum, silver. And what I asked the AI was, what are some metals that can be used in a safe haven allocation? It gave me gold, palladium, platinum, and silver. So I put that back into the AI and I said, build me a contract ladder of all those metals. Everybody see all of this. These are the primary markets and all the contract ladders that come with it. So what I'm going to ask this AI to do is find me an equivalent. Find me an equivalent of all these primary markets. You guys see the exponential? Do you see how this exponentially gives us so many ways to trade? Because not only is going to give the primary way to trade, it's going to give a secondary. If the grading and the scoring and the probability is not where we want it, it'll give an alternative market to trade. And notice we are not talking about ETFs yet. It's giving us alternatives, and then I looked it up. What are alternatives? I didn't want just ETFs. Bonds can be considered alternatives. The utilities can be considered alternatives. So we're going to get into a lot of the other alternatives, and I'm going to find a way to implement that as we go through. But this is the full list of all of the primary markets and the contracts that come with it. So when I tell it to find a similarity, they're going to build it off of these primary markets. So let me go ahead and run this real quick because we got to get through this, because I'm going to use this same primary market list to find the inverted. And I got that prompt down here. I'm building that prompt down here where it's going to do the same thing for the inverted. And then here is something that I did a couple of weeks ago that I found. This is a correlation engine. So I'm going to use this correlation engine for the inverted as well, but we're not there yet. Let's go ahead and take all of this and let's finish building our real market analysis. I think Kimmy is where we were at. What's another AI I can run it on? Let's put it in Perplexity. I really wanted to show you guys that index future, but don't worry, I'll find it, and then I'll add everything together for tomorrow. But we're gonna finish off the real asset model because, like I said, we only did the actual markets yesterday. This is the other part of that where it's giving us the equivalents, and a lot of it is going to be ETFs, which I'm fine with. But that's a whole lot of ETFs.
I just need to find
You
a
said
broker
all those.
where I can actually trade the ETFs.
I know.
Go ahead, Roy. Sorry.
No, I was thinking the same thing. What's what all of those currencies or ETFs that you had listed there, Coach?
Well,
Because all of that's pretty much overnight
those are
type stuff, right?
No, those are the primary markets. That's the ones with equity. That's the ones with equity and real assets. Those are the real markets. I'm now asking the AI to go find the ETFs of every single one of those. Now
I
broke
got
it
it.
down.
That makes
Now,
sense. Yeah.
yeah, I broke it down in contracts because that's what it's going to use to give the original suggestions. So when it's given the grading and the probability, it's going to pull one of those contracts out. If it suggests gold, if it suggests bonds, if it suggests safe havens, I gave all those contracts that it can give you an exact suggestion. How powerful is that? We don't want to know just gold. We want to know specifically which market do we go for. And I know that this won't work for everybody because maybe your broker doesn't offer it, but I don't know what every broker has. I don't know what we're going to have in the future, but I still wanted to build a model that you can still kind of maneuver around. And I'll even give you this. Let's say that they give you a secondary suggestion, right? An alternative or an equivalent or an inverted. You can always go back to AI and say, my broker doesn't offer that. What is another alternative? Did everybody get that?
Yep.
So they'll give you their suggestion, and all you gotta do is tell AI, my broker doesn't offer that particular contract or market, give me another alternative.
Yeah, but I'm thinking for me, just, probably really a different broker altogether is what I would probably shop around
Yeah.
for.
Yeah.
Yeah.
Especially when we're getting into this thing where we're holding things over for 3 days, swing trades, intermediate. One of the brokers like TradingView doesn't really cater to that level of trading. They're going to penalize you and give you fees for holding on to things, overnight. But this is all progressive. I like the fact that it kept the priorities in place. Remember, I said when I originally built it, I said index futures are the primary. That's all I said. I said no. I said put it in order of priority. So it kept the priority: index future, commodity futures, corporate shares, currency futures, and then bonds. This thing is so comprehensive, guys. It has everything. And we're still building the real asset model. I want you guys to stay focused. We're not on the inverted yet, but we're going to run the inverted after this. And it should run it the same way. Can you imagine an inverted of all those? You're going to get equivalents and you're going to get inverted. And then guess what I'm going to do after I do that? I'm going to introduce the concept of the dual hedge. Once I introduce the concept of the dual hedge, now it's going to really give you multiple trades. Because we do not short the market, we do not use derivatives. And a lot of these equivalents are derivatives. So once I remove shorting as an alternative and I remove derivatives as an alternative, I'm going to replace it with the dual hedge, where you can trade two of these alternative or inverted markets to get the same opportunities. All right, Perplexity finished. Loving this, man. And wait till the end, guys. I got a surprise for all of my my fraternity students. I got a surprise for you guys, but I'm gonna save it for the end. It's a little side project that I'm gonna work on. We're not gonna work on it in the Zoom. It's something that I'm working on. Hopefully, it'll be ready sometime when we enter into the new the next cycle on the 15th. And Ashanti's coming in right on time for this. I got a surprise for you guys next month that you're gonna love. All right, so is this done? This thing is still building. Scory legends for everything. It's a lot to build. I'm loving it.
You're using Kimmy as the final agent for everything.
Just for building, because I really like Kimmy. I think Kimmy is one of the top AIs right now. I probably could run this on ChatGPT and Google, but I really like Kimmy. Tell you what we'll do. We'll run it. Well, nah, because the stack.
No, I'm becoming a big fan of Kimmy too. I'm using it
Yeah.
in business, and it's a huge game changer.
Yeah, definitely.
Now you guys remembering me and your will when you remember who introduced you to Kimmy.
Yes, ma'am.
It's so cute, of course.
You are correct. Yeah, I can't run it on this because I would have to run the first 5 stacks first. So let's just stay with Kimmy for now. I might run it off the Zoom later today. But this thing is going. Now I can also do that, and that's how I know I should be able. Yeah, man. I know exactly where it was. It was in Perplexity. Because Perplex. Remember, I showed you guys yesterday that the echo. I know exactly what to look for. Remember, I showed you yesterday that they changed the echo acronym. I can find it. I can find it right here. Remember, oh yeah, this is it. It's in here. So they changed the echo acronym. So the reason why I know that this is it, because inside my prompt, I told it to fix it. So let me go down to the next prompt. I found it, I found it, I found it. Because I told it to fix the echo. I said, go back to the original. So let me go down to that prompt. Here it is. Make the following changes. This is it. I found it. I found it. I found it. So make the following changes to the real asset model. Return to the original version of the echoes. Factor in the institutional positioning smart money score, which they have, and apply it to the safe haven protocol and the 4 horsemen scoring matrix. Now I got these two from Kimmy, but Perplexity didn't have them. So what did I do? I brought them in. If I want you to apply this smart money score to the safe haven protocol, I got to give you the safe haven protocol. So these are all the different if thens. Composite probability below 55, the Rouse below 0.8, conditions are unsafe, smart money manipulation exceeds 70, smart money trap exceeds 70, VIX exceeds 30, all of this. So this is the safe haven protocol. When all of these things are found, they're going to give a suggestion for a safe haven allocation. The other part was the 4 horsemen scoring. I told you guys that I wanted to include the smart money score within it. So I added that smart money score and all 4. So I also told it to include the smart money, and I even put it in myself. So we got that part. Now here's what we did. Here's where I said, actually 85%. That's why I couldn't find it. I lifted it up to 85. So take the attached real asset model, and that's the one with the real asset and the three index future analysis. And I did upload that right here. It's not showing it to me. I know I uploaded, it's just not showing it to me. But I said right here, when the grade for the Dow is over 85, trigger the model to execute DFMI. When the grade to the NASDAQ is over 85, trigger the model to execute NFMI. And when the grade for S&P 500 is over 85, trigger the model to execute SPFMI. And I have the upload, I just don't know where it is. I can't find it. And that's when it gave me all of this. So what I'm going to do is, after we build this this alternative or this equivalent, I'm going to take that part and this part, put it together to come up with the final model. Is everybody with me? Everything is here. Index future trigger logic. What's going to cause it to execute these 3 models? You receive grades for the majority. For each index, you will have an overall grade of 1 to 0. Supporting echoes, smart money, sentiment, and momentum signals. You must apply the following triggers. If the Dow Jones grade is over 85, trigger the model This means you must perform a deeper, dedicated analysis on the Dow Jones Index Futures using the DFMI logic before finalizing recommendations. And the same thing for all of them. When any of these triggers are activated, you must give specific consideration to index futures as the primary low-risk real asset category. Remember, we said that should be the primary. So it's reiterating that it's a priority. You must clearly state in your narrative that one of these models was triggered and summarize the key conclusions from that deeper module. If multiple index grades exceed 85, you must analyze each triggered index. So it won't just pick one. It'll do multiple if the grade is good, which I've never seen that. Has anybody ever seen both index futures give over? I've seen it give over 50, but I've never seen it give like 75, 85.
I don't know that I've ever, asked AI for that,
Yeah, well, keep in mind we've been doing this for over 2 months now. The original one, which how we started this, it gave these grades for the index futures, and it was always like a 35, a 55, and then like a 75. And most times it was NASDAQ that was giving us the 75, 80. But I still have it in there that even if multiple index futures gives a high grade, it'll run both of them. And you see how we have this primary markets, equivalent, and inverted. And that's what we're building right now. So that's why I know that when I go back and put all this together, it's going to know exactly where to put what we're building right now in Kimi. It's going to know exactly where to insert it. It's going to insert it in section 7. So I'm just letting you know I have the piece. And I'm glad I was able to show you the work product. This thing is still building. All right, so let's do this. I want to start the inverted, but I can't. This thing is building, bro.
Damn, coach, I thought this was the inverted.
No, this is just a real asset on finding the equivalents. This is finding the bonds and the ETFs. We have to build this before we can build the inverted. And this thing is still going.
I'm still tripping. You did all this in 60 days, man.
I know.
Thought process in December in 60 days. Boom. It's incredible.
And obviously it would have been done sooner, but we went off track to the quarterly earnings. This would have been done even sooner. But we're back on track. And this thing, I see everything. Everything is in here, guys. The manipulation, the dark pools, the smart money, it's all here. All right, there we go. So let's go ahead and I want to copy this out so I don't lose it before I put the inverted in. So this is our stack 5 with the and I think I'm going to replace this. Yeah, let's go ahead and replace this. All right, so this is the most current one. So now that we have this, and like I said, I'm going to turn this into a PDF and I'll even tell you this, guys. This is so comprehensive that it would be better if we uploaded it as a PDF. This thing got so many pieces to it. I can't run this as a prompt. 18 pages.
Wow,
18,
that many? Oh my God.
18 pages.
And we
So I'm
haven't
going to
even
go ahead.
got to the inverted.
Haven't even got to the invert. You got it. So I'm going to run this probably as a PDF.
Wow.
Uh, and I should, and the inverted model should not be this deep, because the inverted is just going to pull from this model. And I'm going to tell the AI, keep it brief, or keep it simple, or whatever, because all you're doing is finding the equivalent. You're finding the primaries, you're finding the equivalents, and you're just going to find an invert.
But coach, you have all of those index markets in there too, though.
I know.
Yeah,
All
it
the
took
all
on a
the
life all of its own after that.
Yeah, all those different contracts, man. If I added this stuff up, it's got to be like 3 dozen contracts.
Bloomberg somewhere steaming right now if you knew about this.
And I keep saying this, guys, and I'm not joking. I really want you guys to understand. When I get this thing working, and I meant to talk to you a bit. I remember I told you back in like November, December, when you introduced that platform that will create the mock-up for me.
Yeah,
And
yeah.
I said keep it in place, because I'm going to revisit. I'm going to ask you to revisit it. In the next 30 days, when we finalize this thing in the next cycle, and we have the inverted model in place and everything's working fine, and we got all the bells and whistles and we're running it. When
Yeah.
I get this thing in place, I'm going to ask you for that particular platform, because you do notice that when I run this on Kimi or Claude, it doesn't really work as good. There are certain particular
Hmm.
platforms that are literally catered toward running the the whole model on their platform. They host it. You can come in. You pay the monthly
Yeah,
fee,
yeah, 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 yeah.
that type of thing. So that's what
Hmm.
I'm looking for. And
Oh,
I
wow.
don't mind paying them the money to keep it on that platform, because what I'm going to do, I've been transparent since I introduced this. And like I said, if I get a big payday, everybody's getting $1,000. So I am going to introduce this model to every single investment firm that I can find. And this may not be quick, this may not gain traction, you know, but I'm letting you know I'm serious about this. We got to get paid for all this
Good,
work.
good.
So you'll see me do that in the coming weeks, the coming months. Um, and I'm not blackmailing you to stay inside of the university, but think about all the people that left the university. They're not going to be a part of this. They're not a part of this right here with the inverted model. And then wait for the surprise that's coming. Let me run the inverted real quick, and let me show you the surprise that's coming. So here we have it. Now let me do this. I'm going to go ahead and get the inverted prompt. And you want to know what I want to do? I'm going to say I'm not going to lose this prompt, because I don't know if I'm going to need to come back. So this is the equivalence prompt. And I just want to keep it just in case. I'll put it out here, equivalent prompt. So now I'm going to create the inverted prompt. Take the expert suggestions given for the real asset markets that have a unsafe, low momentum, and low probability score, and provide additional suggestions on inverted markets. Our strategy is not to trade high-risk markets, options, Forex, and crypto, or instruments, leverage and shorting, high-risk markets, or high-risk instruments. Let me copy high risk over so it understands that. Like leverage and shorting. So we will rely on finding inverted markets for low risk real asset markets. So once again, it's going to take the primary markets. Let me make sure I have the word primary in here. Use our strategy. Hold on. Take the expert suggestions giving for primary and equivalent markets that have an unsafe low momentum and low probability score. So primary markets and equivalent markets. And then now it'll go through this and then offer. Now here's something else. I want to build the stack, right? We just had that whole nother stack of stack 5. So let's do that as well. Let me pull up the stack, the document with the 5 stacks. So right here we got the 5 stacks. I'm gonna find model 5. Come on, dude. Oh, hold on. Oh, I could put in stack 5. Give me a second. Stack 5. Dang it, bro. Oh, I'm matching case. That's what it is. We take off matching cased because it's in all caps. There it is. So we're gonna replace this whole thing. No, that's page up. Give me a second. Hold on. So let's do this again.
Coach, while you looking at that, I'm tripping that we was actually touched $110 barrel oil on the 9th of this week.
Yes, sir.
And nobody said it.
Yes, sir.
The market said something for sure, because I remember I put up a picture of that and everybody just flooded it out of stock and into oil. That was crazy.
So here we got this. So now this is the new one. I can save this as stack 1 through 5. So now I can run the inverted model. And what I'm going to do is I can start a fresh dialogue. I don't have to run it on this. By having stack 1 through 5, I can basically take the prompt and just stick it into another AI dialogue, a brand new one. And all I got to do is go back to Kimmy up here. Is this the one that had the stack 1 through 4? Yeah, see how the stack 1 through 4 is? So let's find, man, I wish DeepSeek had their new version. I would love to test this out on DeepSeek of 4, but we're not there yet. So let's go to ChatGPT. And let me tell you why this, so it all makes sense. I don't want to put it back into Kimmy, even though it's a new dialogue. I do not want to put it back into Kimmy because I don't want Kimmy pulling from old dialogue. Does that make sense? Remember, I tell you I hate old dialogue where the AI can go back into previous conversations. I don't like that. So I'm going to run this on a whole separate platform where we don't have to worry about the AI cheating and trying to think about what we need. I want to give a fresh dialogue. That's another reason why I didn't run this on ChatGPT and Google. And I might even be able to run it on Claude as well. But let's do ChatGPT, new chats. I can upload stack 1 through 5. Fellowship. 1 through 5. Beautiful, beautiful. And then now we go and get the prompt. Equivalent, now I want to save this as inverted, save as inverted prompt. All right. And I also got to put in to tell it to use the inverted engine. Remember the inverted engine down here? This is the whole key to everything. All right. For the inverted analysis, take the expert suggestions given for primary markets and equivalent markets that have an unsafe and give additional suggestions on inverted markets. Correlates primary markets and equivalents markets by using the inverted market correlation engine. I'm going to say using and expanding. So don't just use it, expand it out. It's basically a template. So by using and expanding the inverted market correlation engine. And it gives the strategy of no high risk markets, no high risk instruments, and we rely on the inverted markets to give us more low risk trading opportunities. And that's what I'm going to put in, low risk trading opportunities. All right, guys, let's go ahead and copy this out. Put it into ChatGPT. Let this run. Let's go to Google, do the same thing. Give me a new. Let's upload that stack 1 through 5. Thinking. We'll let that run as well. We are finally here. We are finally building the inverted model. Oh my goodness. How long did we wait on this? Like you said, like 2 months ago, we came up with this idea.
We should have an inverted model party.
Yes.
Pop the bottles.
Right? All right. So while this is running, let me show you the gift. Let me show you the present that I have for all my fraternity students. And I'm gonna say this, and please do not get upset with me because I let all the students come in here. There's a lot of people that have not paid for the fraternity, and I've let you guys stay the entire 2 hours. And I've never say, hey, we're gonna leave now, we're gonna leave now. So do not get mad when I do this. This is only for the fraternity students. And I might even put a limit of how long you've been with me. But I'm not going to do that yet because I want Ashanti to eat from this as well. Ashanti's coming into this. So every single fraternity student, and I feel bad for the people that fell off, that didn't see the value of what we were building. Because let me show you what we're doing. I'm sitting around the house and I'm like, man, it's got to be something else that we can do. Winter is here. So let me show you what I did last night. I went to UAI. I went to you because I remembered that you has agents. Man, will you stop doing that? You AI. All right, so down here I have the fellowship fund. Pay attention, guys. Notice the prompt. Compare Warren Buffett's Berkshire Hathaway portfolio. You want to compare that with Ray Dalio's all-weather fund. These are the funds that have weathered, that have existed, that have done year over year profits for decades. We want to follow what the billionaires do. So compare Warren Buffett's Hathaway portfolio and the all-weather fund. Highlight similarities in what assets make up each one's diversification strategy, along with the allocation percentage of each asset. I want to compare these strategies to build a custom allocation of my own, but I need this investment research before I can move forward. Provide a rationale for each diversification and allocation decision. So here's what we're going to do. Remember I said we're moving forward. We got a whole new investment strategy. I want to take all of the fellowship shares, all of the fellowship companies, and I want to create my own portfolio. I want to create my own allocation. Does this make sense?
Yes. Mm-hmm.
And then once we get this in place, we can add it to our model to where when it's given the safe havens, when it's given the real markets, when it's given the equivalents, and when it's given the inverted, we can stick it in there right between the safe havens. Go ahead and let me know what is the best way that if we were to take this information and want to hold on to a stock for 3 months, 2 months, 6 months, a year, what is the allocation that we should have as we're investing in all 11 of the fellowship? How powerful is that?
So we get the positioning, and then we get the advice from Warren or Ray Dalio, and how
Well,
they
yeah,
would how they would move on that position.
and yes, I also thought about that, and I'm glad you mentioned it because I am going to say, what would Ray Dalio and Warren Buffett do? So I am going to put that in, but for now, I just want to find out what is their strategy for allocation. And then I'm going to take that model and truthfully, if I took you through here, because I scrolled through it all last night, and there were some powerful things because they, and I ran this on 2 different platforms. I ran it on Perplexity as well. But basically, obviously value investing, and think about that when we're going into the tech and we're finding new tech that's being implemented, that's value. So I'm also going to implement those kind of key, components. But notice that there's gold, there's commodities, there's bonds. So think about what we're building with the equivalents and with the inverted, with what we have primary, equivalent, and inverted. So as the AI is giving all those suggestions on an individual, it'll also be able to take that same analysis on safety, real markets, equivalent, and inverted, and it can build us a fellowship fund. So that fund will not be just the 11 fellowship companies. It's going to have some right here: stocks, bonds, gold, and cash. Notice the difference between Warren Buffett and Ray Dalio. So it's going to be diversified. It's not just going to be the 11 fellowship, but we're going to have some bond placements. We're going to have some, and it usually says, Warren Buffett likes to keep about 10% of the cash. So like I said, it's going to give a nice suggestion on what the allocation should be in our fellowship fund.
All right? So Warren and Ray are focused on the on the safe haven positioning?
Well, it's not even that. They each got a different strategy, and this is showing you the strategy. Warren Buffett, dominant portfolio. And this, remember I said that companies that can't fail, companies that would never go to zero, companies that are built into the infrastructure, company that is, and keep in mind, it's also built into society. McDonald's, Coca-Cola, they have brand loyalty. There are certain things that Warren Buffett chooses. So once again, we're gonna think about going into the 11 fellowship and with that same mentality. So Warren Buffett has its allocation based on those kind of metrics. Well, Ray Dalio is all over the place, but Ray Dalio is going risk. So, like I said, we're going to find a balance between the two strategies. Once we have that strategy in place, and see, it even gives suggestions on what the custom allocation is. 50% stocks, that'll be the fellowship. We got 30-40% bonds. We got the gold and commodities, 10%, which all those gold. And keep in mind, we even got a little bit of ETFs we can sprinkle in. So it even gives us suggestions on what the allocation will be. Like I said, I'm not going to build this in the Zoom. This will be like a little side project that I'm going to do over the next 30 days. But when I'm ready, I'm going to launch this, and this is going to be strictly for the fellowship. I'm sorry, for the fraternity students.
These are more like long term. These guys buy and hold though.
Yes, that's what I'm
So
talking
these are,
about.
oh,
Yes,
nice. Okay, yeah.
this
Oh,
is
okay. So now you're
yes,
finally accepting that you was a fund manager in your other life. Nice.
yes. That's exactly what it is. We're doing the momentum. We're doing all these other kind of trades. 3-day swing, 2-week intermediate, all of that. But remember, I said you want to get to a place where winter is here. We want to buy the stocks and hold on to it, and that's where this comes in. We're building a fellowship fund, and I'm hoping that this will encourage you to build your own allocation. And even if you got to build it one share at a time, one stock at a time, buy one NVIDIA, two NVIDIA, buy one Microsoft, two Microsoft, one Apple, two Apple. And slowly over time, you can decide, okay, I got an extra $300, I got an extra $1,000. Do I want to put it into a short-term investing with all this momentum, with all of the, this whole stack that we're doing? Or maybe I want somewhat of a long-term, because I don't have the time or the attention or the focus to invest in these little smaller areas. So let me just pull that money and put it into somewhat of a long-term allocation. But this is my present to everybody that is stuck around, that sees the value in what we're building. We're going to create a fellowship fund based on Warren Buffett and Ray Dalio strategies. And this is also to encourage people to come into the university. Can you imagine where we were 7 months ago? And here we are now building this powerhouse of an analysis that's going to give us every suggestion possible. And then bringing in this fellowship fund is going to give us the ultimate goal, where we can allocate it to so many different areas. Intraday, swing trade, intermediate, and even somewhat of a I don't want to say long term, but somewhat over maybe a 2 or 3 year hold. Any comments, questions, suggestions? Now, the reason why I ran it on you, because I chose the investor update. Like, it had an AI agent. Generate polished investor reports, upload your fund data, and it delivers. Now, there were 3 of them. Let me show you the agents. I had 3 agents to choose from inside of you. One is the investment memo. The other one is the investment update. And then there was one more. Yeah, here it is. Investment memo, investment assumption, investment update. So I had to look around and say, okay, which one was the best one to run this on? So I had an AI agent run that to make sure that it's on point. And then what do you think we're going to do after we create this inverted, after we create all of this? We're going to add this to our fellowship fund. So it's going to run this entire stack specifically designed to give us suggestions for our fellowship fund. Let me say it for you again. We're going to run our entire stack specifically focused to give us suggestions on what we should invest in with our fellowship fund. Who's excited? But that's my little side project, and that's my little gift for all of the fraternity students. And Ashanti's coming in this, and he's gonna get it as well. All right, so let's go back and look at what we got. ChatGPT, Stack 6 architecture, inverted market engine. Here are our triggers, below 65, below 60. Now, here's another thing, guys, which we haven't talked about yet. I'm leaving the triggers in place. I'm leaving the conditions in place, the grading, all of this in place. Believe me when I tell you, you can change. If you don't like the 65, if you want to be a tighter 75, a tighter 85, you can go back and adjust this. And I'll tell you where this is going to come in is when I build the platform. When we were talking about, building a platform, I'm going to build the platform where you can put in the adjustments. If you don't like the 65, the 55, the 75, the 85, it's going to give you this little area where you can plug in the numbers on how tight you want your scoring to be. Right now, we would have to do a global search and replace. Let me show you what that looks like. So if I do a H, hold on. So this is where you find and replace. So if I put in 55%, and I can put in here 75%. Come on. So I can have it go through and replace every 55% in here. That's not the right model, which
You're saying that you can go in there and change the figures within the prompt?
yeah. Just
In
do a
that
global
text
search
app?
and replace. Yeah. For every 65, you can replace it with an 85. Before you put it into the AI, you can adjust the numbers.
Coach, you can make money just on the manual for this.
Well, like I said, we won't have to do that if I create the GUI. If I create the interface, it'll just give you a little area where you can adjust the numbers. Because sometimes the markets, you maybe want to be a little lenient, 55, 65, but sometimes you may want to be a little bit tighter, 75, 85. So that just makes sense to give you that ability to adjust your grading. Adjust your grading and adjust your suggestion. But maybe I'll show you what that looks like tomorrow, because obviously I'm going to copy this out. And I know where to do it at. I got to do it in the stacks. Stop it. Yeah, this is where you do it. See the 55s? Let's try 65. All right, let's try 85. Come on now. See, a score of 75 or higher. See, I can change those numbers. Exceed 75. I can go and change all these numbers to 85 or 65. Does this make sense? And you
Yeah,
want to change.
you'd have to put in a like a scenario suggestion, different scenarios. Here's a direction you can go in or something like that.
Yeah, that's if we're going through the AI to do it. But I'm telling you that you can do it in the prompt before you ever put it in the AI. That's what this part is. You change the numbers before you ever put it in the AI.
Oh yeah, that's got to be something we only know about then.
Yeah. Well, like I said, we're doing that this way, because it's all text based. But once I create the GUI and the interface, it'll have a little place where you can adjust the numbers yourself.
Okay, I see your point. Right.
All right. So see if there's anything else. So this is the inverted model, guys. We're gonna leave it here. This is the inverted model. We have finally done. Look at all this. Look at this. Up and down on the oil and the dollar and the bonds and the gold. Look at all
Was
this.
ChatGPT still working? It just finished all of it? That inverted model?
I haven't even gotten down to the bottom. I'm just showing you what they did so far. We got our safe havens. Look at all the currencies. Currency safe haven. Sector rotation. I didn't even ask for this. I didn't even ask for sector rotation. Love it. Utilities, healthcare, staple, energy. So if tech is weak, you rotate into utilities. If tech is weak, you rotate into healthcare. If growth sector is weak, you rotate into staples. If the consumer sector is weak, you rotate into energy. So I'm loving this. And then once it gives that rotation, it's going to give suggestions on primary markets, equivalent markets, and inverted markets. Here's our hedging, which I told you I'm going to introduce dual hedging. Oil up, index down. Equivalent is energy and currency future. The Canadian dollar of future. Man, I'm loving this. And I'll tell you what this is, guys. Pause. Let me tell you what this is. This is the blueprint. Who bought the blueprint? With all those inverted. Everything showed you inverted this, inverted that. This is the blueprint.
I forgot about the blueprint. I remember that. I didn't get it. I remember because it came and went so fast.
Yeah. Because it was an encyclopedia of inverted models. And I still have that PDF that I'm not getting rid of because that thing is a manual on inverted models between the dollar and the oil. Anything that happens in the markets, it tells you what the inverted is. And think about this. What if I uploaded that blueprint into this model? I never even thought about that.
That's what I was thinking you was doing the whole time, is that you was going into your stash and AI and all of this stuff. I really thought that you was starting from the roadmap all the way up to King Cheetah and everything in between, and you was AI in there. That's really what I thought you was doing.
That inverted PDF would be steroids for this.
You did that analysis 2 years ago.
Yeah.
And we wasn't even in. We were still in the binary. So what came about the blueprint? Because the blueprint was what was the methodology and thought process? Because I remember because you was working on you was working on the crossbow and you had AI and you was working on that. So because the blueprint came after the roadmap, right?
Yes, and the crossbow and the sniper AI wasn't even a thought. I'll tell you
right.
I'll tell you where I came up with it, because inside the cheat sheet, of the roadmap was all these inverted markets. If this is going this way, then that's going that way. I'm like, well, man, what if I created an entire course of the inverted models of the gold, the dollar, and the oil? So if dollar does this, how many other markets are going the opposite direction? If gold does this, how many markets are going in the opposite direction? So it was a complete inverted markets, and the triggers for those markets was everything, all the economics, all of the corporate release, like every single thing you can think of. If something happened in the markets, here's the market we're looking at, gold and dollar, and then if this gold and dollar is doing this, then here are the inverted markets that we can look at. And it just traced everything. It was a brilliant concept, but it wasn't a newbie concept. And that's the real reason why I did not take off, because I was introducing this very complicated and high-end kind of a method to beginners. So it was still good. It's still good even today, but it just wasn't a introduction. It wasn't a new thing that people coming in could understand. It was too much.
Yeah, I remember that. It ran a lot of people out.
Yeah, but on this level is a perfect way to reintroduce it. But
it takes me back to your road. It takes me back to the roadmap, because I remember, if you know what you had with the oil and the dollar and the gold, and then you had with the different currencies, and each one of the titles had an arrow going in the opposite direction.
Exactly.
So what you did was took all of those arrows and then the blueprint, and you had this in mind. But again, it was way too complicated. So that's when you started breaking the other. You have the bear cub or the cubs, and kind of yeah.
Keep it simple, but I can always revisit that. And like I said, I won't even add that to this yet, because I want to see how well this works. But if I really wanted to just create a separate inverted model by itself, then I would take this stack and then isolate it, and then bring in that entire PDF with all those inverts. So let's play with this for now, but that would be next level. All right, but we got all the inverted probabilities, all of this stuff is in here. Safety, like I said, no options, no crypto, no leveraged ETFs. Notice I said do not leverage anything, and a lot of those ETFs are leveraged. I'm so glad the AI caught that. A lot of those ETFs are leveraged, where you can 10x and 20x. No. So be confident that if this AI is giving you a suggestion for ETFs, it is not leveraged in any way.
I had no idea ETFs were leveraged. That's good to know.
Half of them, if not most of them, are.
The guts of them leveraged.
Yeah.
I've always wondered what was the guts of ETFs. They just a bundle of this and a bundle of that, but bundle of what?
It's a bundle of different stocks, but they put in that, because the broker puts in that little mechanism that, if you borrow against it of your assets, we'll 10x and 20x your money. And it's a bait to get people to invest in more in ETFs. And believe me, that same thing happened with the crypto ETFs. Highly leveraged. Because think about this. Here's the reason why. Because those ETFs don't move enough to get any major profits. So the only way that they can encourage people to use the ETFs is that small movement in the ETF now gives you 10x the amount. Does that make sense?
Yeah, because we don't know what our brokers offering what's inside of these instruments.
Yeah.
And every broker is different. So exactly. That's good information.
So that's a beautiful thing. So it says right here, these are all suggestions of full echo scoring system for stack 3, a 100 point catalyst grading model for stack 4. Like I said, I have no problem implementing these things, guys. Even in stack 0, global liquidity engine, I don't even know what that means. What institutions actually trade on. So I have no problem, and let me kind of pull this off and put it in my notes, because we may come back and implement some of these in the individual stacks later on. Hey, give me this. Stack, build, suggestions. So we'll come back to that. But guys, it's built. It's built. The only thing we haven't done yet is connecting the Carla positional model. I'm going to do that later on today. So when we come back here tomorrow, the entire stack of 7 will have its connectivity. All right. I'll make sure everything is connected. So when we run this, the entire 7 stack tomorrow for the NVIDIA, everything will be in place. And then going into next month, next month, I'm sorry, going into next week, going into our next trading cycle, we're going to start making changes. Things that don't work, things that do work. We're going to be fixing everything in the stack over the next few weeks, going into our next session. But we have arrived. We finally got the inverted model in place. And it looks beautiful. And you see how small it is? That's what I want. So I want this to be a prompt. I'm gonna tell it to create a prompt for this. And the only 2 PDFs that we're gonna upload is the Catalyst and the real markets. Everything else will be prompt.
Say that again, Coach.
Well, keep in mind, let's go back to the economic reports. If you remember, we were just uploading all these different documents, and the AI said, nope, too much. So we basically kind of picked and choose what PDFs we want to upload, and we limit it to 2. That way we don't go over our limit. So in this series of stacks, the 2 uploads will be the Catalyst model. Let me show it to you. See this PDF right here? We'll be able to upload this 2.0 fellowship Catalyst, and then also what we just built with the real asset model. We'll be able to upload this as well. Now I don't have it yet, but because I told you I'm going to take the real asset model. I'm going to take what we built today with that entire sequence of real, equivalent, and inverted, and I'm also going to take the index futures. So it's going to be 3 different components that I got to build to create the final real asset model. But once we have that, well, look at this. This will explain it. Where's that document? Remember I showed this thing was 18 pages? Yeah, this 18 page. This is going to be a PDF. So the Fellowship Catalyst will be a PDF, and this is going to be a PDF that you just upload.
What are you going to label this? And what's the this whole thing is the asset analysis model. Yeah, I got to study that a little bit more because that's
well. Let me take you back so you don't have to confuse yourself. Think about every single prompt that we put in. We introduced the 6 stacks or the 7 stacks. Hold on, let me find it. This should have it. Yeah, see the stacks? So you don't have to question on which stack you're using. Each one is labeled. Stack 1, stack 2, stack 3, stack 4, stack 5, stack 6, and stack 7. Now, here's something else that I'm going to do. Let's finish this off tomorrow. I'm going to put all of this in the cloud. I'll put everything in a nice little stack folder on the cloud, and then all of you can access this. Right now, I've been working on it so much, but coming into next week, everybody will be able to access all of these different files and prompts and PDFs and all of this. So if you guys want to run it on your own, modify it in any way, whatever you want to do. So I will build this into a nice little directory, a repository on the cloud that everybody will be, or at least the fraternity students will be able to access. We have any questions on any of this, guys? All right, let's come back tomorrow. Let's finish this off. Let's finish off with the connecting this to the positional model. I'll have all of this connected tomorrow. And then we're gonna run it. There may be a little bit of stuff we have to do, you know, on the live, but we'll have plenty of time to run it for the NVIDIA GTC conference for next week.